Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Today I have a video talking about the Federal Reserve trying to prevent a recession by pumping more money into the economy since COVID-19 is so tragic and so catastrophic. So this article from Kitco is titled "Gold and Silver Prices Soar After Fed Action, Previous Forced Selling Abates." Now, since I was just mentioning how the Federal Reserve is pumping all this money in, it's also helping skyrocket precious metals prices. Right now, we see gold at $1,622, silver at $14.13, up 86 cents on the day. So the link to this article will be in the description. So gold soared for the second day in a row early Tuesday after the Federal Reserve announced dramatically increased measures to prop up the economy and the markets with open-ended quantitative easing and other programs. Further, the U.S. dollar is softer in recent gold selling to meet margin calls and often losses in other markets appearing to be abating, some say. So when the dollar index is stronger, gold and silver is weaker, and vice versa. When the dollar index is weaker, gold and silver is stronger. Now, since we have to pump so much of this money into the economy, it's also sharing how scarce and limited the supply of not only precious metals but of our dollars are. And these, the printing presses, the money printers are having to go overtime to really make up for all the losses that we've had around the globe. So at 7:30 a.m. EDT, the COMEX silver April gold was $99 higher to $1,666 an ounce. May silver was 67 cents higher to $13.94 an ounce after gaining 7% on Monday. And it's actually up to around $14.13 right now. So the price surge was triggered by the announcement of a new sweeping measures by the U.S. Federal Reserve to combat the recession that's looming in the U.S. So the U.S. is actually has the highest number of cases of COVID-19 now. It's actually topped China and Switzerland, and it's becoming very, very, very serious in the U.S. So people are becoming even more scared and more panicky, and this might even go to further lengths to try to combat the virus from spreading. So this also brought the U.S. dollar's upswing to an end for the time being. The June dollar index was down 1.5 points to 101.1.740. Everyone has wanted a shiny piece of gold over the last 24 hours. And this is true, and this is where gold really comes into play, is when demand starts rocketing, when your friends talking about it, the news is talking about it, YouTube videos are made over it, and everyone wants to get in once prices start rising. Not beforehand when everyone's telling you to. They have to see some proof that it actually is, and then usually all the new money comes in, which actually makes the price go even higher. So after the Fed took unprecedented measures to defend the U.S. economy from the coronavirus outbreak, so the precious metal has appreciated since the start of the week and has potential to extend gains on dollar weakness. A sense of unease over the coronavirus developments and fears around a global recession should support appetite for gold moving forward. So gold has gold and silver, because when I'm talking about gold, I'm talking about silver as well. Gold and silver have many benefits and many angles that can be taken at it to rise in price. Not only is it supply and demand, not only is the dollar, but it's stock markets, it's the state of the economy, how fast COVID-19 is spreading, whether the Federal Reserve is cutting interest rates, so many factors, plus its natural benefit, its natural value of it being an intrinsic metal that you have to dig out of the ground if you want more of it. So gold and silver have a lot of potential right now, a lot of potential, especially when things are bad happening in the economy. That's what makes gold and silver usually shine. So Frisch commented that measures being taken by the Fed policymakers are considerably more aggressive than those implemented during the financial crisis that began in 2008. See, we're seeing a mimicking thing happen right now, where the 2008 credit crisis, we saw gold and silver plummet around the $4 range or something along those lines, $9 silver, and then that's what shot silver up to $50 in 2011. So we could be on the same type of playing field right now, since the historical charts from these and in the 70s, 80s are almost identical. and it's saying that things are even more aggressive than in 2008, so we could see even higher than $50 silver. So further, the US and German governments are working toward massive stimulus packages. Numerous analysts have been blaming weakness in gold during the last couple of weeks as selling in the futures markets to offset losses elsewhere. See, people have lost so much money in stocks and other places that they're cashing in their gold and silver, trying to make some of that money up. Fritsch pointed out that the metal rose sharply on Monday, even though U.S. equities were still on the defensive. The fact that gold nonetheless gained by 3.5% yesterday can be seen as the first sign that selling pressure brought about forced selling is gradually abating, he said. The SPDR Gold Trust also registered an inflow yesterday for the first time in 10 days, in just shy of 16 tons. It was fairly sizable into the bargain. So on Tuesday, stock index futures were pointed towards sharply higher openings on Wall Street. Commodity brokerage SP Angel commented that the price increase also has been partially driven by supply constraints of the three major refineries in Switzerland. Announced Monday they suspended production for at least a week due to measures to combat the epidemic or the pandemic. See, that's the thing, is that right now a lot of places that would or should be digging up silver are closed due to COVID-19 or combating it, and also the Royal Canadian Mint is shut down for 2 weeks. You can still place orders, I think, but they'll probably sell out fast. So we have this interesting situation right now where the demand of silver is rapidly rising, but the supply cannot be met. So that is another huge factor that gold and silver have playing for them. Over this video, I've probably said around 7 or 8 things individually that can push prices higher, but all together you can see why people want gold and silver. There's so much potential in these metals right now. There's so much potential. I definitely think that right now I would be more bullish, on the bullish side. Even if I was trying to minimize things, I would definitely be on the bullish side, simply because gold and silver have so much going for it. So some of the Twitter tweets from Kitco is First Quantum cuts senior staff salary by 20%. Blue Rock Diamond stops tender due to an absence of international bidders, closes. Gold soars on the wild day as London spot price confusion. Quebec miners start to digest provincial governments from COVID-19 directives. Alamos Gold to suspend operations at Island Gold, and is the Greater Depression finally here? They're calling it the Greater Depression. South African mine closures push palladium prices up 15% and platinum jumps 11%. New record high gold prices are coming in the medium term. So you can see how we're definitely heading into a recession, and they call it the Greater Depression, which is going to be very interesting times for precious metals prices. Not only that, but we also have the presidential election to throw on top of things. Last year, I would talk a lot about the 2020 presidential election and the unknown variables, the unknown factors that we don't know, which could heavily influence prices for the greater or for the worse. And COVID-19 is one of those prime examples of those unknown variables that are thrown out of left field that no one sees coming, but that now that it's here, it's heavily influencing prices, and we could see that even more in the future. We could see that happening with other situations. Maybe COVID-19 gets even worse by a large scale. Maybe it gets better and that throws people off, and maybe the markets do recover. But right now, all we know is that markets are doing what they're going to do. And as long as we invest strategically and take the emotional attachment out, thinking rational, we have the best opportunity to become successful investors. So when I'm looking at the Fed's doing this right now, it's obviously for the safety of the economy, not really thinking about the consequences on end, but it is going to be looking good for precious metals. So with that said, I'm going to wrap this video up here. The link to this article from Kitco will be in the description, like always. Make sure you smash the like button. Let's see if this video can get 75 likes. I think everyone can do that. That's a reasonable number. 75 likes, so make sure you smash the like button. Also, make sure you subscribe. each and every person subscribe, because I do post daily videos. So with that said, I'm going to wrap this video up here. Thank you so much for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.